Gold to silver ratio says silver is hitting bottom. Check this out. Both gold and silver prices have been heading higher for the year, but the price relationship between the two could portend to silver overtaking gold in the future. And look at these numbers. Gold has been rising 20% year over year. That's not a shock. We're living with this $2,500 spot price for gold. But look at this here. But silver hasn't been far behind with a 17% gain. People forget that when we're in a bull market for silver, silver often outperforms gold. Look at how close silver is for the cheap price. I mean, come on, 17% gain. It says the two could switch leads if the gold to silver ratio indicates that silver is close to reaching bottom. I'm going to show you in this video exactly where we're headed with silver. This says silver has been trending lower the past month, falling about 10% while gold continues to rally. However, according to FX Empire, the gold to silver ratio is reaching a ceiling and silver's sell-off could be ending soon. So if you're looking for that low buy price, then this could be your time. Look at this. This is FX Street, and it says silver forecast. Silver holds below 28.50 as traders shred bets on deeper Fed rate cuts. I'm going to show you in a minute how this is coming about. Encouraging data right here. Encouraging U.S. economic data on Thursday has eased fears about a potential recession in the United States. For many, it's eased fears, and it's reduced the speculation of an aggressive rate cut by the Fed in September. There's been a lot of contemplation between a quarter rate cut and a half basis point rate cut. And it's looking, if you ask me, it's looking more like a quarter. This in turn drags the white metal lower. It's worth noting that higher interest rates generally decrease the demand for precious metals prices. We need to take this into account. Our silver stacking community, we're so excited, like everyone is, to get a rate cut. We want access to loans. We want access to cash. We want access to lower mortgage rates, just like everybody else. But in terms of silver, it says right here, this in turn drags the white metal lower. It's worth noting that higher interest rates generally decrease the demand for precious metals and prices. If you're enjoying this video, please hit like, please hit subscribe. It really helps to get this information out there. And look at this. This is data out today. This is excess inventory pressures, U.S. single-family home building. And these are the economic indicators that help the Fed determine whether or not they're going to go with that half point basis point cut or a quarter. This is Reuters. It says U.S. single-family home building dropped to a 16th-month low in July, likely weighed down by Hurricane Beryl and an oversupply of new houses, higher mortgage rates. Look, mortgage rates recently were getting down to, like, if you're lucky, 6.5%, right? You can get a mortgage rate down to that if you're lucky, and that's still very painful to sign up for that for a 30-year mortgage. I mean, that's really, as it shows here, it's depressing sales. So we've got strong economic indicators coming out yesterday, but as we look at the housing market, this is something that the Fed is going to be taking into account as they determine which way to move. I mean, look at this here again. Housing starts. This is the data that came out today. Housing starts. Building permits surprise to the downside in July. This is data that came out today. U.S. housing starts dropped 6.8% month over month. Drop right there. Here's another drop. That's down 16% from July 2023. We're looking at year over year. Single family housing starts ran at a rate of 851,000. That's down 14% from revised figures. Building permits slipping 4%. So all of this data, this is what's being looked at as the Fed determines what to do. So for us as silver stackers, I say, we need to look at this gold to silver ratio and look at it tightening. Presently, it's about, and this is just off the top of my head, we're at about 80 to 1, 80 ounces of silver to 1 ounce of gold. So if you're new to silver stacking, we study the gold to silver ratio because silver is more accessible. It always is. And especially as gold is hovering at 2,450 up to 2,500 an ounce, of course, that's out of everyone's reach. So we look at the gold to silver ratio because we could stack more silver, and as that ratio tightens, as we get down to 71, even lower, we've seen close to 30. Again, off the top of my head, there's been, I think during the great financial crisis, we're close to 30 to 1 or 34 to 1 for the gold, silver to gold ratio. Can you imagine 30, even if it was like 35, can you imagine 35 ounces could get you 1 ounce of gold? That would be very exciting. If you're like me, you've been stacking silver for so long, I mean, that's what we want. So we need to look at this tightening of the silver to gold ratio, because this is really going to work in our favor. As we see these interest rates start to come down, people are going to take more risks. And when they do that, they pull out of the safe haven of silver, and that's going to impact our price of silver. So hit that subscribe button, hit the like button, help get this information out there. It's so important. I will see you guys in the next one.